Nigeria Breakthrough PLC, right? Which is May 2025, question 1, right? Breakthrough PLC. Okay. Now we have to compute the consolidated cash flow statement of the question, right? And when you're computing your consolidated cash flow statement, you have to use the indirect method. Am I right? So the indirect method is where we make use of our income statement and statement of financial position. We make use of that very, very well. Although for the other aspect of, if you are using the direct method, you also need your income statement and statement of financial position. You can make use of that, and you may not make use of that. But anyways, that's it. Now, for our question, okay, now to start with the financial position, sorry, the cash flow statement, we have 3 activities in cash flow statements, right? Yes, sir, go ahead. Is someone raising up their hand?
Sir, please, just is the class recording?
Yes, sir.
Yes, sir. Are we recording?
Yes, sir.
Okay, okay.
So, consolidated statement of cash flow for the year ended when? Eh?
December 31, 2023.
31st December 2023. December 31, 2023. Okay. Now, for our consolidated cash flow statement, right, we have 2 figures, naira. Please don't forget to use your naira. And all the questions are in naira thousand naira. I just want to confirm. Yeah, 1,000 naira. So that you're not doing 1,000 naira for one item and then 1,000 for another item. It has to be uniform. Okay. So what do we have in our cash flow statements now? Yes, what do we do? The first thing we have is what? Under indirect method. I think I told us yesterday, right? Was it yesterday or Sunday? Saturday. Are we there?
Yes, sir.
For the indirect method, we start with our net profit. Right? Now, the net profit given to us, what is it? This is the non-current asset. This is the revenue, right? Now, this is the profit for the year. Profit before tax is 1,380,000. Profit for the year is 916,000, right? Now, this is it. Whether you start with profit before tax or profit after tax, is still the same thing. But the thing is that it's better for you to start with profit before tax so that you don't have to add back the tax. For instance, if I'm starting with profit after tax, I need to add back my tax because the tax is an expense here, not the cash flow for tax paid, not the tax paid. Do you understand? The 420,000 naira given to us here is not the tax paid. It can be the tax paid, but at least it is an expense for now. Do we understand?
Yes, sir.
There's a difference between tax for the year and tax paid. Right? Usually when you have deferred tax, yeah, you need to consider all of those things. Now, so we take profit before tax. And what's our profit before tax? 1,380,000, right?
1 million. Yeah.
PBT. profit before tax, 1,380,000. So after we find our profit before tax, what else is next? We add up non-cash items, Abby.
Yes, sir.
Okay, so what are the non-cash items we have?
We have a depreciation.
All the non-cash items that have been deducted. Do you understand?
Yes.
All the non-cash items that have been deducted from this account to arrive at what we arrive at. To arrive at the profit before tax, everything has to be taken back if it is not a cash transaction. So what are the items in our P&L account? So we have share of associates profit, Abby, right? Now, share of
Yes.
associate profit is an income, not an expense. Am I right?
Yes, sir.
It is not a cash item, right? Now, do we have depreciation in the question? Do we
We
have
have a
depreciation?
depreciation.
Okay,
We have
so
depreciation in
let's
additional
let's
information.
just start with uh, our non-cash items. Basically, hello, please. Basically, when we say non-cash items, eh, they are provisions. Provisions. Eh? Aha. So for non-cash items now that we have, what are they? We have depreciation. What's our depreciation in this question, please?
120 million. 120 million.
There was no disposal. Depreciation charge for the period is 120 million. Depreciation 120,000. Abby?
Yes, sir.
We are using thousand. Since our question is in 3 zeros, right? So what else do we have? We have interest expense. Interest is an expense, but it is not. It is a cash item. Interest is a cash item. Do you understand? But we might not pay cash. Does not mean it is not a cash item. Do you understand that, sir? The thing is that interest is an expense. All expenses that we can see that are not cash payment, we need to bring them back. Right? Now, in this question, after our gross profit, we have the distribution and administrative expenses. That one is most likely cash item. Interest expense is an expense, not per se. Our interest paid might be different from the interest expense, right? So that's why we classify all of them as under non-cash items. But that doesn't mean we don't pay cash. Unlike depreciation that we don't pay cash at all. And other provisions. All right, so let's bring them out. We have interest expense. How much is our interest expense? 80,000. Right? What else do we have? Now, share of profit in associate. Just like we discussed, share of profit is not a cash item. It is a profit, not a cash flow. Do we understand, please? Profit is different from cash.
Yes, sir.
Somebody else should respond, though, not just one person.
Sir, I've been pleading and pleading and pleading. Somebody should help us draw screenshots of the question. Everybody is keeping quiet.
They don't have the question.
The past
Who
question
asked
I
for
have.
question?
I did, sir. Nobody has said anything.
You should have
So that
told
we
me
can
now.
also follow as well.
I'll send it.
I dropped it in the chat.
I'll I'll send the question to the group now. Which of the groups are you? SBR 1 or 2? Regardless, I'll send it to the 2, don't worry. Something is wrong with my WhatsApp. Okay, I can get it now. Please, you don't have to keep quiet. So if you don't understand, please, you let us know that you don't. I mean, if you don't have the question, let us know. May 2025. Okay. My system is hanging. I think I've shared it with one of the groups. SBR1, please confirm that you received it. Okay, it's on SBR1. Please confirm if you have received it.
Confirmed, sir. Thank you very much. Confirmed, sir. Thank you.
Okay. Shall we proceed now?
Yes,
Yes,
please.
sir.
Okay. Wow, this thing will not be loud. Let me use some mic. Okay. So we are talking about the what's it called? My system is hanging. What's going on? Okay. Share of associate profit. How much is the share of associate profit? Is anyone there? 60,000. Yes, what else do we have? So if this is for our income statement, right? Then what else do we have? Foreign exchange difference in associate, right? Is not part of our net profit. Let's look for any. Now, draft group statement of changes in equity. Recognize income and expense for the period, right? new shares and all of that. Now, any impairment on goodwill has been included in the draft financial statement. Hello? Goodwill impairment has been included, right? So let's check if we have any goodwill. Now, balance sheet. We have goodwill in the balance sheet, right? Which is 60,000 and 50,000. Am I right? So now let's know what the impairment will be. So we have it to be 60,000 and where is it? 60,000 and 50,000 for goodwill. Okay, so let's see where we have our impairment. I think, okay, impairment losses on PPE offset against revaluation surplus. Hello? Do we have any revaluation surplus? Impairment losses that have been offset against revaluation surplus. Do we have any revaluation surplus? You have a revaluation reserve of, this is 2023. You have a revaluation reserve of how much? 100,000 for 2023, right? 100,000 and 290. Abi? Okay. So what else do we have? Okay, I think this 190,000 is the difference between the, could it be this 290,000 and 100,000? Yes, that's the difference. This is the valuation reserve. 290,000 minus 190,000. So that's the loss on the valuation surplus, right? But what is the loss for the year? I mean, the one that will be included in the consolidated cash flow statement. What is the impairment or goodwill itself? I hope you understand my question. Do you understand my question, please? Hello? Yeah, we have impairment from the goodwill. Now, if you look at the goodwill itself for last year was 50,000. Abi? Am I right? Now, the goodwill, we are to depreciate it, impairment, right? I just used the word in depreciation. Now, how many years? Any impairment on goodwill has been included. Now, how do we impair our goodwill? What's the impairment from 60,000 to 50,000? It was 60,000. I mean, it was 50,000 last year, goodwill. Right? Am I right? Then let's see. I think we acquired another goodwill. Right? Where is our acquisition? Where is that information? I think I heard it earlier when you were reading the question. What's the acquired goodwill? Let's see. Where is that information, sir? Can you included in the 800,000? There was no actuarial gain. Goodwill. Provision for 70,000. Okay. So we have a purchase consideration of 200,000. Abby? Hello? We have a purchase consideration of 200,000. So this is it. Let's calculate for our goodwill, right? So that we can add it to the current goodwill we have, right? We want to arrive at this 60,000 they got in the second year. 60,000 naira here, all right? Now, if the initial goodwill was 50,000, let's leave that. Now, we had another consideration. We purchased a new company, right? Are we there? Aha. So we set a consideration ahead. Now, the purchase consideration was 200 million. Who did we acquire? Which company did we acquire? Huh? Hello? Dandy PLC, right? Thank you, sir. So let's compute our goodwill for Dandy PLC. Computation of goodwill for Dandy. So for the goodwill now, let me use this. Okay. So what's our purchase consideration? What's our consideration, please? We have 200 million in cash and 50 million deferred payments, right? Okay. So for our consideration, let me separate them because of someone who will say that, how did we get it? Right? We have cash consideration. How much is that? 400. Sorry, 200. 200,000. Abby? Right? Let me bring that video here directly. 200,000. Then deferred. How much? 50,000. Right? Now, 50,000. So that means our total consideration is 250,000. Abby? In case I'm asking how we got the 250,000 though. This one is 200,000. Right? Now, 250,000 now is our total consideration. Right? Yeah. So what else? Yes, 250,000. What will be the next thing? Net asset at acquisition. Abby? Hello? Now, the difference between the discounted value of the deferred consideration of 50 million and the amount payable of 58 million is included in the interest expense. So that means the interest expense we took earlier, the 8 million has been included. If not, I didn't mean it was not included. We have to include it too. I hope you know that. Are we aware? Okay. Now, let's see. What's the net asset at acquisition for Dandy PLC? This is for water side. Okay, so provision for 70% acquisition and holding in PLC, right? Breakthrough is here to make provision for its 70% acquisition and holding in Dandy PLC. However, the company wants to set up a provision for reconstruction, right? A cost of 20 million naira, right? Now, the fair value of the net assets acquired are as follows. Net asset. You have this one to be 320 million. Abby? Hello? Hello? Okay. Now, let's bring up this information. This is the draft group. So additional information is here. Goodwill, we've taken that. This one, depreciation, we've taken that. Included in dividend paid during the year is 800 million for Waterside, a subsidiary, right? Then the transfer was made. This one, 95% portfolio are yet to be transferred, right? Now, Breakthrough PLC at the end of the year annually, capital expected is this. Now, what again? This is the fair value of the net assets acquired. Hello? The fair value of the net assets acquired is 320 million, right? So let's use that fair value. I just want to be sure that it didn't give us net asset. if they gave us net asset at the date of acquisition and not the fair value, you know. So of course this one also is the fair value of the net asset, right? So let's say if I wanted to check if they are measuring it using fair value or net assets, but of course they've given us the fair value of the net asset, right? So yes, so that means our fair value now is at 320 million. I mean, fair value of net assets, net assets, assets at acquisition, how much is that? 320,000. We have to less that now. Then what's our, what's it called, NCI at acquisition? NCI will be what will be our NCI now? How many percent did we purchase? We purchased 70%, Abby? We purchased 70% now, Abby? Okay, so let me do it this way. Let me do this one. Let me bring the net asset first. I mean, NCI at acquisition is how many percent? 30%, right? 30% of 320 million. And that will give us what? That will give us what, please? 96 million. Okay. Yes, so what do we have here now? Do we have any goodwill? That gives us 26,000. Right? Are we there, please? Okay, so that's our goodwill is 26,000, right? Now you can imagine at the beginning of the year we have a goodwill of 50,000 at the 60. Was it 50 or 60? We have a goodwill of 50,000. We have an additional goodwill of 26,000. Ordinarily, that should give us 86,000, Abby. I mean, 50 plus 26, 76,000. Abby? Does anyone understand what I'm saying? You understand? Right? Okay, so let me call this goodwill from Dandy. Now, if this is the goodwill from Dandy Investment, what's our goodwill at the beginning? Goodwill brought forward. What's our balance brought forward for goodwill? 50,000, Abby. So what's our total goodwill? 76. Right? Hello? We have 76,000. So goodwill at the end of the year, goodwill carried down is how much? 60. Abby? That means we have what? An impairment of how much? 16,000. So that 16,000 has left our goodwill. We are supposed to have 76,000, but we have 60. Right? Am I right? So this is our impairment. Impairment on goodwill. Now you can see someone else that will call impairment and impairment loss. Ordinarily, to me, anywhere I see impairment, it is a loss. Do you understand? Anywhere you see impairment, impairment itself is a loss. Do you understand now? Do you understand what I'm saying, please? So impairment itself is a loss. So when you are saying impairment of goodwill, I mean impairment loss of goodwill, to me I see it as tautology. Alright? So now we can bring our impairment in, Abby. Am I right? Impairment on goodwill. How much? 16,000. I mean, it's an expense. And they told us that this impairment has. Yes, sir. Go ahead, sir. Go ahead, sir. Okay. Why are we what? I can't hear. Hey, your network. Oh. No, we did not. Your network did not allow us. Better, sir. Go ahead, sir. Yes, sir. Yes. Okay, so share of associate profits is what do we call it? Is an income. And since it's an income, it has been added to that net profit. Share of associate profit is a profit. That means it was added to, the profit was added to before we arrived at profit before tax, Abi. Shebi, this is it here. Where is it now? Where is our income statement? Yeah, this is it. Share of profit, it is an income. While they were jacketing the other one, while they were expending the other ones, it was an income. So it has formed part of this income. And it is not a cash item. So we need to remove it. Do you understand that, sir? It is not a cash item. So we need to remove it. It has been added to arrive at this 180 million. 1380, I mean. Am I right, sir? Hello? It has been added to arrive at 1380. Then you need to remove it. So that was what we did. Any other question, please? Any other question? Yes, sir. Yes. Yes, yes, yes. We use the non-current asset and Abi. Oh yeah, now that one is simple. Now that one is simple. So this is it. What? Can you hear me, sir? Do you know the formula for net asset? Do you know the formula? Does do we have anyone? Do we have anyone else? Total asset minus what? What type of liability? Is it total liability? Ah, you are thinking. Okay, right now, I think by now you should understand it. Now, when we are looking at the asset, I don't want you to memorize it, okay? I don't want you to memorize it. Can you hear me? Please, can someone else hear me? You guys should unmute yourself so that if one of us is not hearing us, we'll know that it's the person's network. So I think your network is bad. You might need to fix your network before. If you want us to enjoy this class, you might need to fix your network. Can you hear us, sir? Are you there, sir, Mr. Suleiman? Can you hear us? Who is asking question, please? Mr. Suleiman, is that you? Okay. Now, Mr. Isaac, I think you might need to mute yourself if your place is noisy. And if it is not, then you can talk to us, don't worry. Now, the formula for net asset is total asset minus current liability. Abi? Now, when you remove your total asset, which is current asset and non-current asset, and you remove your current liabilities, that is when you now have equity and the non-current liabilities, like loan stock, loan notes, debentures, Abi? As well as preference shares, right? Now, that net asset is still the same thing. Is either you use, and it will give you the same figure, Abi? That's what it means. So your total assets minus your current liability should give you your equity plus your reserve plus your what do we call it again? In case you have share premium, I mean, in case you have debenture, in case you have all of those things. Abi, your total assets minus your current liability should give you that same thing. In this case, it's still the same as well. Now, they gave us what the fair value of that net asset as that when we purchased it. So they gave us this figure. That is, this is the only asset they had. No current liability. They only had PPE, 140,000. Current assets. Maybe it's non-current asset and current asset, I mean, total asset. So your non-current asset, 140,000. Your current asset, 180,000. Current liability, 0. That is what it means. I don't know if you understand me, sir. Do you understand that, sir? So that is it. Now, had it been they gave us the financial statement, financial position of the company when we purchased it, that is when you'll be looking for the equity, right? The equity and the non-current liability, equity, reserve, retained earnings, and the rest of them. But we don't have, they only gave us these two. So that's it. I guess we can move on now, Abby. We can move on now, Abby. Okay. Now, yes, do we have any other expense that we have not added? Do we have any other expense? I recorded some expense in my head while he was reading the question, right? So ordinarily, when I'm reading a question for myself, I usually jot down. That's why I usually tell you to read, what do we call it? What do we call it? Requirement first. Do you understand? So that if you read the requirements, then you'll be looking at the items you want to take note of. Do you understand? So that's the essence of it for me. Sorry? I can't hear you, sir. We have... Yes, I can hear you. Thank you, sir. Yes. Yes, sir. So we have a current and past service cost, which is here, that has been charged to the P&L account. Movements in retirement benefits. Are we there, please? Right? This is a liability. This one is not in the income statement. This one has been charged to the income statement. If it was not charged to the income statement, we will not include it. Do you understand? We will not include it there. But this one, this 26,000 has been included. Contributions paid to retirement benefit scheme. This is cash payment. We don't need this one now, have we? So that's it. 26,000 of current and past service costs has been included in our income statement, have we? So current and past service costs. How much is it? 26,000, have we? Yeah, I remember 26,000. Any other thing? I think that's all we have. Do we have any other thing? You can check, please. And this one is payment. Is actual payment. And they didn't tell us that this contribution payment is in our income statement. Even if it is in our income statement, it is a cash payment. Remember, we are dealing with cash flow, and currently we are on non-cash items. We are adding back non-cash items, but this is a cash item. Abi? Am I right? It's a cash item, Abi? So we will not deduct that. Any other thing? This is balance sheet. You don't need anything more. Okay, now we can hear you, sir. Only one item is in bracket. Okay. May I proceed now? All right. Okay, I think now this. Please, you can mute yourself. I think it's you are the reason my microphone is echoing. Now, we are adding back non-cash items, of course, right? Then also add. Let me make it like this: non-cash and yes, I'll make it non-cash item. Let me just leave that non-cash item. Now, for the non-cash items now, share of associate profit is a profit, not an expense. Now, this profit before tax is started from gross profit, Abi. Then after gross profit, please, that person should mute, please. After gross profit, there are some expenses that have been deducted, that was deducted from the gross profit to arrive at net profit, Abi. Am I right? And I believe you understand that. Now, from those profits, from those expenses that we deducted, many of them are not cash items. For instance, depreciation was deducted. Depreciation is not an expense. Depreciation is a provision. Abi? Now, interest expense is not a cash item. It is an expense. It is possible we paid more than this 80,000 naira as interest. It is possible we paid less than 80,000. Am I right? Don't forget, we are on accrual basis. We have owings, we have prepaid. So it is possible we have any of that. Now, share of profit is a profit that has been added to arrive at 1,380. It is opposite of expense. The rest of them are expenses. Only share of profit is an income, is a profit. So that is why if I'm adding back the expenses that have been deducted to arrive at this 60,000 has been added to this, I need to deduct it because the share of profit is 60,000. We are not sure that 60,000 is what we actually received. That's number one. Number two, share of associate profit is not an operating expense. It's not part of our operation. It's not an operating activity. When you receive a share of profit from an associate, it is from an investment. You invested in that associate. That's why you got that profit. So it should not be in operating activity. That's why I need to remove the profit of the profit of 60,000 that has been added to arrive at 1,380,000. Does that make a sense now? We have spent 1 hour on these few items. Shall we proceed now? Okay, so that's why I deducted profit while other expenses are added back. All right, so what's the total here now? 182,000. right? Now, this 182,000, I've deducted this one from it to arrive at 182. Then another thing we have this heading, I have another heading for my cash flow, for my operating activities. Wow, I did not even include what I'm doing here, sorry. So this is cash flow from operating activities. Cash flow from operating activities. Now, another angle I have is, what did I call this? Changes in working capital. Yes, yeah. Changes in working capital. So let me use that 1 minute to set up. Now, when we say working capital is current assets minus current liabilities, right? Am I right, please? Hello? Current asset minus current liabilities. Capital is current assets minus current liabilities, right? So what is the difference between our current asset and the current liability? That is the closing asset minus the opening asset. Now, since there was an acquisition, right, minus the opening balance of the asset when we acquired it, the new acquisition. Am I right? That's what we have, right? So what are the current assets we have in the question? I know you guys can decide that you don't want to talk to me. So what are the assets we have? What are the current assets and current liabilities we have in the question? Hello?
We have current liabilities. We have trade payables.
For current
Current
assets,
assets, inventory,
Current assets.
we have inventory, right?
trade
Now,
receivable.
inventory increased or reduced. We have 1,300 for inventory, right? We have
Is the i-
1.16 at the beginning, right? But we also
Inventory
acquired
increase.
an inventory during the year. Abi?
is,
Hello?
is decreasing. Hello, sir.
It
Is decreasing.
Our inventory has
increase.
decreased. Okay, we will know. We shall know. Don't
Increase.
worry.
Yes.
I'm coming. For inventory, I'll write it if it is increase or decrease. Inventory.
Is
At the
decrease
beginning of the year was
decreasing.
how, no. At the end of the year is how much? Inventory at the end of the year is how
One
much? One
One
three
three.
hundred.
1.3.
1-3.
Yes.
1.3 million, Abby. No, let me use one
Yes,
three
Yes,
sir.
sir.
hundred. 1,300 minus at the beginning was what? 1,160 minus 1,160.
1,160.
One
Abby. Then we also acquired inventory during the year, Abby. How much is our inventory? 180. Abby? Hello.
180, sir.
Yes, sir.
We
Yes, sir.
acquired
180.
180, Abby,
Yes.
minus 180. That will give us what? What will that give us? This is 1,340. 1,340 minus
40.
1,300 should give me 40, Abby.
40. Yes.
Yes.
40,000. Now,
Minus 40.
so that means 1160 minus 18. I mean 1160 plus 180 will give me what? 1,340, Abby. That means my inventory has
Yes, sir.
reduced. Decrease in inventory. Right? In case you are not
Yes, sir.
sure, hello, if you are not sure whether it's an increase or decrease, just write inventory. If you are not sure, just write inventory, but make sure you get your figures right. But you need to be sure how. Now, this 180 is at the beginning. This 1160 is at the beginning. 1160 plus 180 will give you 1,340. So 1340 minus 1300. That means it has reduced. I mean, but in case you are under exam tension and you are not sure, please, that's how to get it. Now the next one we have is what? Our other
Trade
current
receivable.
asset is
Trade
what?
receivable.
Trade receivables.
Trade receivable.
Receivables is 1220 and 1060. Abi, we did not acquire any receivables during the year. 220 minus 60 is what? 140. Is it 140?
160.
160. 160,
160.
Abi. That means we have
Yes,
an
sir.
increase. Increase
Yes, sir. In receivables.
in trade receivables. That's 1220 minus 1060 minus 1060, and that gives us what? 160, I mean,
Yeah.
an
Yes, sir.
Bracket.
increase. Now if our inventory increase, if our inventory decrease, what does it mean? It means that we have sold out more inventory. That is the meaning, that is what it means, that it increased, I mean it reduced. Now our receivables, at the beginning of the year we had 1060. At the end of the year we have 1220. That means our receivables have increased. I mean, that means we sold more goods on credit. We sold, but we didn't collect cash. I mean, so that's what we have.
Yes, sir.
Shall we proceed?
Yes, sir.
Okay.
Yes, sir.
Then the next one we have is what again? Cash and cash equivalent will be at the end of the account. I mean, because we are dealing with cash flow already. Now let's go to our current liability. Current liability, we have 3162. I mean, and 2860. I mean, am I right, please? Is anyone there?
Yes, sir.
Yeah, now. Do you
You
have
know,
any
where we
current
see that.
liability? We should normally, if this is what you are saying, we are saying that our receivables have increased. I mean, increase in trade payables. Now, how much? 3162 minus 2860.
280
3162 minus 28
minus
what? 60.
860.
Okay, yes. That gives us what?
302.
302.
Yes, sir.
Now, are we sure there was no payables during the year? I think I heard something. I'm not sure. I know that for Dandy only gave us non-current assets.
There's no
Abi,
payable under the acquire, under the
but wait,
acquisition.
oh. The composition of current liabilities, non-current liabilities and retirement benefits are as follows. Trade payables. Hello.
Yeah.
This is the
Yeah.
composition. This is the composition. So this
Yes,
one
sir.
is interest payable. We will not pick interest payable now because we'll deal with interest separately. Taxation, we'll deal with that separately. This is our trade payables. So we use current liability instead of trade payables. Now this one is 2682 minus 2400. 2682 minus 2400.
Minus 200.
Abi?
Yes, sir.
Yes,
So
sir.
they gave us the composition. And what will that give us?
282.
682, that is 282.
Yes, sir.
282,000. Any other information? We don't have any payables again, Abi. We don't have any current liabilities anymore. Abi?
Yes, sir.
Abi? Mm-hmm. We don't have any current liabilities anymore. Okay. That means we are done with our changes in cash, changes in what, sir? Changes in
Movement
working
of
capital.
working capital.
And that this gives us what? 162, Abi. Yeah. 162,000. Any other thing? In the absence of any other thing, This will give us cash flow from operations. Hello? Cash flow from operations. And what's our cash flow from operations now? 1724, I mean 1724,000. This is our net cash flows from operations, not operating activities. Net cash flow from operations. Yes, what else do we have? Now, the interest paid that is in our income statement. In our last class, I told you that all revenues is an operating activity except other incomes. I think I mentioned that, and I'm not thinking. I'm very sure I mentioned that. Other incomes are not in operating activities. Did I mention that last week? On Saturday, can someone confirm that I mentioned that? Other incomes are not in operating activities. You can't remember. Okay, let's leave that so that we don't waste our time. So this is our net cash flow from operations, right? Now, interest paid, that is in operating activities. Interest paid, tax paid, those two things, right? We can treat them in two different ways. You can put them in operating activities. Why? Because we usually expense them. Number two, you can put them in, I'm focusing on, interest paid and dividend paid. Interest paid and dividend paid. You can put them in operating activities. Why? Because we usually expense them and we put them in our income statement. Another thing is that you can put your interest paid in your financing activity. Why? Because you paid interest as a result of borrowings. And what do you use the borrowings to do? To use it to finance the business. I don't know if that makes any sense. You guys should unmute yourself and talk to me. Does
Yeah,
that
it
make
makes sense, sir. Yes, sir.
So those are the two places you can put your interest paid. Operating activity, because you usually expense it in your income statement. Also, it can be in your financing activity. Why? Because you collected that, you paid that interest due to the fact that you borrowed money to finance your business. That is what we have. Shall I proceed? Now, for dividend paid is also because you are paying to your equity shareholders, right? To your shareholders. Now, if you are paying to your equity shareholders, that is a source of financing the business. Am I right? Am I right?
Yes, sir.
So
Yes, sir.
that's
Yes, sir.
why when you see what do we call it? Interest paid and dividend paid, you can do it in those two ways. All right? But if you look at your ICANN study pack, they put them in financing and investing activities. Financing activities. Two of them are financing, and yes, two of them are in financing activity. Of course, dividend received anyhow is as a result of investment. So dividend received is investing activity. Interest received is also in investing activities. Any question? I can proceed back. Yes.
Yes, sir.
Yes, sir.
Okay.
Hello, sir.
Yes, sir.
That means interest paid can be placed under financing, right?
Yes,
Is it
sir.
okay like that?
That's what I said too,
Okay,
sir.
okay. All right, okay.
Shall we proceed? Shall we proceed,
Yes, sir.
please? Okay.
Yes, sir. Yes, sir.
Yes, sir.
So
Yes,
that
sir.
is that. Now, my interest paid, according to your ICANN study pack, both on skills and professional, they put it in financing activities. So I also put it there. And tax paid. Now we cannot bring in our tax paid. So you can see that the interest expense here, we need to remove it. Now, tax paid. For tax paid, we have deferred tax. We have tax liability. Abi? Am I right?
Yes, sir.
We have a deferred tax
Yes,
Yes,
sir.
sir.
liability. We have tax liability in 2017. I mean 2022 to be 370,000. Abi, and in 2023 we have it to be what? 380,000. Abi, am I right, sir?
Yes,
Yes,
sir.
sir. 380,000.
380,000.
380.
Then we also have. Do we have tax paid in our income statement? Do we have tax paid in our income statement? Profit before tax, income tax expense. Yes,
Yes,
we
sir.
have an income tax, which includes tax on income from associate. Oh God, I don't know if you understand what I'm saying.
Yes, sir.
It includes tax from income from associates of 20 million. So what is our own income tax?
400.
400 million.
400 million. Please, do we understand what I've said now?
Yes, sir. We
Yes,
understand,
sir.
sir.
Yes, sir.
Now, what will now be the tax that will be paid? What is the tax that was actually paid? I don't know if you understand that word. Tax that was actually paid is how much? What will it be now? Hello?
Okay. Mm.
Eh? So let's do our workings. Are we there?
Yes, sir. Yes, sir.
Let's do
We
our
have
workings now.
Okay, sir.
So for our workings now for tax paid.
opening balance and
Yes, we have.
the one opening balance, the one paying in the statement
Yes,
of
sir.
the profit
Yes,
and
I know.
loss.
I know. So for our tax paid now, we have balance brought forward.
Yes, sir.
What the balance brought forward?
370,000.
370,000. Okay. Yeah. 370,000. Balance brought forward. Right? Income tax. Or let me say income tax for the year.
400,000.
400,000. Abi?
400,000. Yes.
Then balance carried down. Is how much?
380.
380,000.
Yes,
And
sir.
that gives us what?
Three.
AA. Our closing balance should be in minus. This should give me what?
390,000.
390,000. 390,000. Right? Okay, let's go now. 39.
So
And
what
you
of
remember
that?
something?
What of that provision for differ
Thank you. Which one? Where is the provision for deferred tax?
is
Eh.
under non-current
We have
under
provision for
non-current
deferred
liability?
tax. I know I saw something. Ah,
Yes.
so we have provision for deferred tax, Abby.
Yes, sir.
Let me add it to my
Mm,
balance brought forward.
it will now give us 380,000.
Deferred tax. I know I saw something now. Deferred tax brought forward. How much is deferred tax brought forward? Where is it?
50,000
50. Where is it? Where is it? Provision for
under the
deferred tax.
non-current
Abby,
under the declaration of non-current
non-current liability. It has been
liability.
included. 50,000. Abby,
Yes, sir.
then tax for the
Yes, sir.
year. Then balance carried down. And then I also have uh, deferred tax carried down. Abby,
60,000. Yes, sir. 60,000.
that's minus. Abby, minus 60,000. So what do I have here? 380. Abby,
380,000. Yes, sir.
okay,
380,000.
380. So that means my tax paid, actual tax paid, is 380,000. We have another liability. Hello. Yeah, we
Yes,
have
sir.
another payment made, which is also here. Retirement benefit. Or did you not pay?
Is there?
It's part of our operations now, Abby.
Yes, sir.
Uh-huh. So
But
retirement
for
benefit paid. We have 40 at the beginning of the year. Abby, is anybody
yes,
there?
sir.
Uh-huh.
Yes, sir.
We
Yes,
have,
sir. Yes, sir.
so let me do for retirement benefit as well. Okay, I need to make this a whole like this. Oh yeah. Eventually I did not use this part. Then let me delete it. Uh-huh. Even this part self, I didn't use it. Okay, that means I used a straight line. If I can use a straight line, then let me maintain my straight line. Okay, so for retirement benefits now, retirement benefits page. Here now. So what do we have? Balance brought forward. At least I'll have not all of this, but at least balance brought forward is how much? Retirement benefit brought forward, how much?
Sir, I
40,000.
think. Hello, sir.
Yes, sir. I'm listening, sir.
I
Go ahead.
think they have calculated it. I think they have calculated it. I can see that
I'm listening.
in
Go
the
ahead, sir.
breakdown, movement in retirement. I think they have calculated this
Okay, movement
movement
in
in retirement
retirement
benefit.
benefits. At the beginning was okay, we have
Benefits.
it
Retirement.
here. We
They have
have it
they have
here.
calculated it. This
Contributions
is the movement.
paid to retirement benefit has been calculated. Yes, they've calculated it. Thank you. And we saw it earlier.
14,000.
14,000. Abi?
Yes, sir.
Hello, everybody. Do you understand?
Yes, sir.
It has been calculated. So, retirement benefit paid. How much? 40,000.
14,000.
14, Abi?
Yes, sir.
Yeah, 14,000. Any other payment? I guess not.
Mm.
So that should give us minus what? 394,000. Abi?
Yes, sir.
Now I can have my total cash flow from operating activities. And this will give me what? 1,330,000. So this is my net cash flow from operating
So I
activities.
cannot I cannot see
Hello,
my
sir.
boy. Is it my network?
It should be your network, sir. Yes, go ahead,
Hello,
sir.
sir. Please, how did we get this 14,000 as retirement benefit paid?
It's in the question, sir. It's here.
Okay, I saw that
Contributions
we've
paid.
started one calculation on retirement
We
benefit,
wanted
and
to
Remove
then
it.
we wanted to calculate it, but the question has calculated it for us. We wanted to
okay, is it I
calculate it.
wanted to calculate it where we calculated tax paid?
Yes.
Okay.
Yeah, we wanted to calculate it, but the question has done it for us. So that's why we just picked the figure. Yes. Any other thing, please? Now we can go into our investing activity. Yes,
Yeah.
go
Sir,
ahead.
there's a question on the chat box. There's a question on the chat box. I think it was asked by Faye Sheta.
Yeah, now let me check.
I do.
Let me check. I'm not. See, that's why I said that if you have any question, somebody should speak out. Now that you have seen it, thank you. Because someone like me, if I don't, you can see my page, Abby. Can you see my screen?
Yes, sir.
If I am not on this
Yes, sir.
particular page, I don't see whatever message anyone drops in the chat box. Do you understand? If I'm not on this page, I will just hear the voice. Okay, the person said you are lost with figure for tax paid. How we got 380? Ah, is here. Please, how did you get 380? Auntie Feisheton, are you there with us? If you can hear us, just follow us in case you can't talk here. This is the balance brought forward for taxation, right? This is the deferred tax brought forward as well. Tax for the year. So if I'm owing 370 and 50,000 before, as my balance brought forward, and I have another tax to pay of 400,000, that means my total tax is 820. Abi? Then in that 820, I realize that I have a closing balance of 380 and 60. So this is how we got the 380. All right. So that is it, please. This is how we got the 380,000 for tax paid. 380,000. All right. That's it.
Sorry, sir. Please, I have a question.
Go ahead, please.
Because if I was in the exam hall and I saw interest payable, I would have probably done interest paid. So now I'm noticing that we did not do it here
Oh
because
yeah. So
so
that's
I'm
it.
just
So that's
trying
it.
to.
Interest paid is different from interest payable,
Okay.
right? Just like when we are calculating, let's use tax for example now. Now, tax payable is different from tax paid, or tax expense
Okay.
is different from tax paid. It is possible I have a tax liability of 5 million naira and I decide to pay 4 million naira this year. And I tell tax authority, please, oh, I'll pay the remaining 1 million next year. That's my deferred tax liability.
Okay.
The same thing to interest expense. It is an expense, interest payable. But did we pay the full amount for that year? We are not sure yet. When we get to interest itself, when we get to uh, financing activity and we are doing interest paid, then you will now compare it. If it was that actually 80,000 that was paid, but even if 80,000 was paid, we need to remove it from operating activity so that we can bring it in financing activity. And I think
Okay.
I explained why I'm removing it from operating activities to financing. Should I explained?
Yes, sir.
And you
You
got my
explain
explanation.
it, sir.
And you got my explanation, Abby.
Yes, sir.
Did we all get the explanation? Okay.
You can throw more light, sir.
On what? On what, sir? Okay, that person has thrown the light out already. Now, what else do we have, please? Net cash flow from operating activities. So I need this figure. All right. The next thing we have is what, please? Yes, the next. Nobody is saying anything. Cash flow from investing activity.
Yes, sir.
So what's the cash flow from investing activity? Yes, what do we invest in? I told us that we invest in what do we call it? Plant and machinery, Abby.
No
We
current
invest in
assets.
non-current assets, Abby. Is that
Yes,
what I
sir.
said? Is
And
okay. Oh yeah, now. So what are the investing activities we have in the question?
when you acquire,
Ah God, my system is hanging,
not
and
cur-
this
when you
is not
acquire
letting.
non-current assets,
So let's go into our non-current asset, right? In the balance sheet, they gave us non-current asset, Abby. Am I right?
yes, sir.
So
Yes,
what's the
sir.
non-current asset we
PP,
have?
you have
Yes,
PP,
we have PPE, Abby. Our PPE is two
Yes,
million
sir. We have
six
PPE.
thirty. Yeah, 2,630,000 and then 2,010,000. Ordinarily, we have to do minus, Abby. Am I right?
Yes, sir.
Sir.
Yes, sir.
Yes, sir. Purchase. We don't know
Okay.
whether we purchase PPE. For PPE, I will tell us if it was a
We
purchase
purchase.
or a
Yeah.
disposal. What's the figure for the closing and the opening balance? Two
The
six
opening
thirty
balance
and
is
twenty
two
ten,
million.
Abi.
I think.
2630 minus
Yes, sir.
2010, Abi. And then we also acquired PPE while we were purchasing Dandy,
From subsidiary.
Abi,
Yes, sir.
which is 140 minus 140. What will that give us in total? Which one is more? 630 minus
The, the
2
closing balance is still high.
150. It is more, Abi.
The closing balance is still high.
480. 480 different.
480.
Yes,
480,
sir.
ba?
Yes, sir.
Yes, sir.
Okay. Now, please be sure that we don't have any other breakout for
You have a depreciation.
depreciation part. No, what is depreciation doing here? I'm not talking about depreciation. I'm not talking about depreciation, please. Liability for the purchase of PPE. Okay, now this one has been included in our liability. Okay. I just want to be sure. No, this one is purchase of investment. We are coming to that investment. I want to be sure that we don't have any other non-current liability. Hello?
Hello, sir.
Yes.
Yes, sir.
Do you hear
You
what I
have
said?
depreciation. You have depreciation of 120 million.
Yes. I know we
That
have a
people.
depreciation of 120 million. And the depreciation, they said the depreciation has been charged for the period, Abby.
Yes, sir.
Now this is it. So in the first place, okay. Now, before we come to depreciation, let us get the movement of our non-current asset. Do we have any other non-current asset, PPE, any other PPE during the year? If we are sure we don't have, then we can move. Do we have any other PPE during the year? Eh?
We still have.
I think there is one in additional information on 5.
We still have.
Additional information 5. Eh? Hello?
Yes, sir. Yes, sir.
Now, let's go into our additional information 5. Oh, provision of 70%. Provision for reconstruction.
So we have one PP in the under non-current liability. The liability for the purchase of PP 288,000.
I don't understand. I can't get what you're saying, please.
Under
Liability.
non-current liability,
Uh-huh.
the the detail of the sum under the
Uh-huh.
finally
Uh-huh.
we have a liability for the purchase of a property P 288,000.
How come I got? Please. Where do you call it, please? Where is the information?
The after the additional information 5, the
Okay.
composition of the current and non-current, the detail
No,
under
now. Are you talking
non-current.
about this 140,000 and 180?
No,
I don't
not that one,
understand.
sir.
This is
Under
additional
non-current
information 5.
liability.
Hello. The non-current
Hello?
liability.
Yes, sir.
No, there is that one is okay. You're talking about this liability for the purchase of 288.
Yes.
That one has been included in liability. We'll treat it when we get to liability.
Okay.
Right? Now, it is in liability, but it is for the purchase, Abi. Now, the thing is this, it is under liability. So we'll treat it as a purchase of asset. Do you understand? But let's get the cost of our asset first. That one, yes, we have 288. So let's get the asset. And don't forget, we still have depreciation as well as impairment. Abi? Am I right? Hello?
Yes, sir.
We still have
Yes, sir.
depreciation and impairment. Abi? For you now.
Yes, sir.
So, okay. So let's go into our for tax, I mean PPE, right? PPE purchased slash disposed, right? Purchase of PPE or disposal, right? And what will that give us? What's our balance brought forward? What's our PPE at the beginning of the year? Is anybody there? PPE at the beginning, I have it to be 2010, right? 2010.
Yes, sir.
2010.
2010.
Then during the year, did we purchase any PPE? Yes, Abby. We
From
purchased
Yes,
the
288.
140.
140.
Eh? 140.
140.
That's from Mandy. Abby?
Yes. Yes.
Yeah,
Yes, sir.
Mandy. Is it Mandy? Dandy.
Hello, sir.
Yes, sir.
Hello, sir.
Go ahead,
Please,
sir.
I want to confirm something. This figure of 1,724,000 and 1,330,000, is there any difference between both of them? Because one is
Where do you
net
see
cash flow from
1,724,000?
operations,
Let me know where you are reading
then the
from,
other
sir.
one is, sir?
Which one? Where are you reading from?
Okay, can you come down a bit? The solution side
Okay, solution.
from the
This
Excel.
is
Yes. You see this figure, this balance that we got as 1,724,000.
what's the
By the
name
side,
for?
it is
Name. Okay,
okay,
this
net
one.
cash flow
Net
from
cash flow from
operations.
operations. Uh-huh.
Yes. And then again, I'm seeing net cash flow from operating activities. Is there any difference
Yes.
between both of them, please?
Yes. There are differences. Operations
Okay.
is what you do daily, what you spend money on, your activities, your production, buying and selling. That's your operation. Abi, when you pay tax, tax is not part of your operation. You pay tax as a liability, then you charge it as part of the operating expenses. It is not part of operation, but it is an operating activity. So that's why we charge
Okay.
tax as part of our operating activity, but not part of operation. Eh?
Okay.
Now,
Okay.
and if I was to bring in my interest paid and dividend paid also to operating activity, interest paid and dividend paid is not part of our operation. It is part of operating activity because we charge it to income statement. They are charges to income statement. They are not operations. They are not our daily activities. If I pay interest, interest is paid as a result of financing my business, right? So even though I put the interest in my income statement, it is not part of my operation, but it is part of operating activity. Do you get the difference, sir?
Oh, yes, sir. Thank you very much, sir.
So that's it. PPE of Dandy is 140. Have you how much, sir? She is 140.
It's 140, sir.
140.
140.
140.
Then what else do we have? Ah, let me do this thing very well. 140,000. Uh-huh. Yes, we have the acquisition as well that was purchased, Abby. The 288 that has been included in liability. Abby,
Yes, sir. Yes, sir.
where is it again, sir? Liability for purchase of equipment. Abby, liability for purchase. So that means I will remove it from my non-current liability when I get to non-current liability. Do you understand now? Eh?
Yes, sir. Yes, sir.
Liability for that is how much, sir? 288,000.
288.
What else?
So what of that depreciation?
Yes, we'll do depreciation now, of course. Right?
Depreciation for
Depreciation will reduce
depreciation
our
from.
balances. Depreciation will reduce
Yes.
all this opening balance. Abi, depreciation is a
Yes,
charge
sir.
on the opening balance,
It's a charge,
Yes,
sir.
sir.
right?
Yes, sir.
Depreciation is a charge on the opening balance. Abi?
But sir,
Yes, I'm
sir,
listening. Yes, sir.
Yes,
that
sir.
way, that way 88 is a closing balance.
Is a closing
There's
balance?
nothing. Yes, there's nothing under the opening
Yes,
balance.
it's three.
Okay, so if it is a closing balance, then I'll bring it under my closing balance. I'll bring it under closing balance. Yes, that means we have depreciation, Abi.
Yes, sir.
Depreciation is how much? 120,000, if I can
120.
still remember. Now,
Yes,
depreciation is
sir.
an expense. It is a charge on the cost, Abi.
Yes, sir.
Now, we can also do for, what do we call it? What did I call it earlier now? Impairment, Abi.
Yes.
Am I right? We can do for impairment here now.
Yes.
So impairment as well. What's our impairment?
That's,
Huh?
180, 190,
150,
190.
190,000. Can someone else confirm that? Impairment is 190. Do we agree? Hello.
is not the one we calculated the other time.
Sorry?
It's
That
not the
one for
impairment.
goodwill now.
We have 15 minutes to go again. God help us. Hello.
Yes, sir.
So the impairment we calculated earlier
Yes, sir.
for goodwill.
Yes.
So I'm asking, is that the impairment you are using as well?
No, sir.
What was our impairment? Now they gave us the value of impairment.
190, 190,000.
Abi, where is that figure?
Yes,
I
sir.
know they gave us the value of impairment.
It's up,
Under
up.
the
Under
group
draft
statement of
group statement.
recognized income and expenses for the year.
I see. Yeah.
Impairment losses for the year. They gave us here. Impairment is 190,000. I know the question gave us 1 minus 190. Abi, any other thing?
Yes.
Any other thing? I guess that's all right. So that means ordinarily we should have a balance of how much? 1840, Abi? 1840. Abi? Am I right?
Yes, sir. 1840.
Then
Yes, 1840.
closing balance is how much? Balance carried down. Balance carried down is how much?
2,630,000.
2,630,000,
2,630.
Abi?
Yes, sir.
All
2,630.
my closing balances should be deducted. Two million 630, and this one also. You said it's a closing balance, Abi? So what do we
Yes, sir.
have?
Yes, sir.
1,078,000. Is that it?
Yes, sir. 1,078,000.
That one is negative now.
Yeah, negative. Yes.
1,078,000 negative.
Yes, sir.
Yes, sir.
Ah, no. Let's confirm. I want to doubt it. God, this guy is. Okay. So where is that? What do you call it? Liability for PPE. Let's read it very well. Let's be sure before we close it. Now, liability for the purchase of PPE, okay, is in 2023. I mean, yeah, closing balance 2023. Abi,
Yes,
okay.
yes, sir.
Then also, uh, now we are now. So if it is in 2023, liability. Wait, now it's a liability now. Abi, if it is a liability, it should be opposite now. Hello,
Yes, sir.
we are calculating for assets. right? Hello, I don't know if you understand what I'm saying. Now let's print this liability separately. This liability is not part of what we have here. Ordinarily, our closing balance is this. What do we have? A minus of 700,000, Abby. Is it 700? Am I seeing 700 or 790?
790.
790, okay. My this thing that I'm using is covering the page. 790,000. Right. Now 790,000 is the closing balance, which is, of course, it means we purchased more,
Exactly.
right?
Yes.
Now we now have a liability at the end of the year. Hello, let's look at the question. We need to understand the question. We don't have that liability before, but
Okay.
in 2023 we have a liability of 288,000. Is that not a purchase? Is that not an addition?
Yeah, it is.
It is an addition. It is a new liability, additional liability. Is that not what we have here? So it is an
Yes.
addition.
Yes,
You will
sir.
not do it
But I
as.
think
Go ahead,
our
sir.
asset at the beginning, at the end is higher than the beginning. We purchase it, and that liability we are going to let it from what we purchase.
Liability we are going to less it from what we purchased, right? Hello, hello. Do you understand now? Now this is the asset we purchased during the year. I mean, this is, yes, this is the asset we purchased during the year. But this 790, 288 has been included as a liability. So if 288 is a liability, that means we have paid 597. What's the difference between them, please?
502 now.
What do we have? 502. That means we
502
paid 502
for the purchase of the asset.
for the purchase of the new asset. We purchased an asset of 790,000, Abby.
Yes, sir.
Right? Now, in our current liability, we have 288,000 as the current liability. I mean, as the liability, non-current liability for the purchase of that asset. That means we've settled the remaining difference now. What's the difference now? 502,000. So that means we paid, cash paid, for purchase of PPE is 502,000. So this is the cash paid. Do we understand, please?
Yes, sir.
The cash paid is 502,000. This one has been included in the liability. So we said we purchased an asset of 790,000 during the year, and then we have a liability of 288. That means we paid 502. Do we understand, please?
Yes.
Uh-huh. So I'll bring this cash paid is 502,000. No, let me put it here. 502,000. Payment, ba? So it's an outflow, right? What else do we have? We are supposed to end this class now, so let's be fast. Yes, what else do we have in our?
We also, what we pay to purchase to acquire the and the mandiab.
What do you say?
What we
Investment
pay
in
to,
Mandiabi, in Dandy.
yes, dandy,
Investment in Dandy is how much?
200,000, 200
Now,
million.
total purchase consideration was 250.
Yes,
Abi,
yes.
but cash paid was
Two,
200.
200.
Abi, this is it here, right?
Yes, sir.
Investment in Dandy. Consideration for investment in Dandy. Cash paid. Oh no, I don't want to use this English. Cash consideration
Or cash raised from the
in Dandy PLC.
uh,
Cash consideration in Dandy PLC.
that
How much is
investment in
eh?
200
That's
200,000.
200. We paid. It's an outflow. Abi? Yes, what
Yes,
else
sir.
do we have?
The investment in associates.
Investment in associates. Where is our investment in associates?
After the goodwill in the non-current assets.
Recognize income for expense. No, dividend paid. Now, dividend paid is also an operating activity. You see these changes in equity. Eh? I need dividend paid here. The rest of them are like shares now. For shares, new shares issued. That one will be for financing activity. Dividend paid is investing activity. Abi?
Yes, sir.
We paid dividend to our investors. Right? Now this one is group changes in this one is for the group. Abi? We don't know how much investment we pay to our associates. Where is our investment in associates? No. All these are group financial statements. Do you have any investment in associates? I'm
Yes,
not
sir.
sure.
Under
Yes, in
the
the consolidated financial
under the
statement.
consolidated after the goodwill,
After goodwill.
we have we
Okay.
have investment
Okay.
opening balance is
Investment in an associate, right? Opening balance is how much? 580.
580,
And closing balance is what?
580,
540.
540.
540. What does that mean?
The difference.
Me, we have sold
Only
the
came
part of
in
the
two.
We
segment.
have we have disposed an investment. Abi?
Yes, sir.
So that one is disposal of investment in associate. Okay, now let's do our investment. I think we have other information on associate as well. So let's do our investment
Yes,
in
we
associate,
have to
right? So let's do our investment in associate. Investment in associate. What do we have on it?
we have opening 550.
Balance brought forward. How much do we call it?
580.
580. Right? Do we have anything? We have information on investment in associate itself. There was a place they mentioned tax for associate. Abi, where is our tax?
Yes, 20 million tax.
Where is it? Not this taxation here. Where is it?
Under the tax, income tax, expenses, include tax on
Under draft consolidated profit or loss.
Consolidated profit or loss.
yes,
Okay, so we have tax for them to be 20 million. Abi,
yes,
share of associate income tax. Abi,
yes,
that's that's an expense to us now. Abi,
yes, sir. Yes,
uh-huh.
sir.
Yes, sir. No expenses.
Share of income tax. How much? 20 million. Uh-huh. What else do we have?
What of
The foreign exchange difference of associates. Abi, this is
yes,
a loss.
10, yes, 10.
FX loss on associates.
Oh,
Abi, how much? 10,000. Abi, do you see that? What other information do we have on associates? income for the period, dividend during the year. Yes, what other information do we have on associate, please? Wait now. We should have income, associate profit now, share of associate profit. Don't we have our income statement?
We have.
Profit, share of profit in associate, 60,000. Abi?
Yes, sir.
Share of profit. Yeah. 60,000. Any other thing? I'm not sure. I think that's all. Share of profit. You've taken this one. You've taken what again? Any other thing on associate? No, I'm not sure we have anything here. That's all. That's all for our associate now. Abi?
Yes, sir.
Abi? Then closing balance. Balance carry down. Should I add it before doing balance carry down? Yeah, let me add it now before I do balance carry down. Total is what? Balance carry down. What was our balance carry down? 540. I think 540.
16.
Sure, I remember.
Yes.
540 is our balance carry down, Abi?
Yes, sir.
Any other information? No. So what is the difference here? 70,000.
70,000.
So this 70,000 is what? Is it an income or an expense?
An
Eh?
income.
An
An
income. So
income.
this is like
We showed
dividend.
investment.
Dividend received. This is the dividend received from associates. Right? So dividend received now. How much? 70,000. If we make a mistake, we'll come back to it. What else do we have, please? Any other thing from our investing activity? Hello?
Yes, sir.
Any other thing from our investing activity? Let's check. Let's check. Any other thing?
Investment in financial asset.
Where do you see it, huh? Where is investment?
Four.
Additional information.
Included in dividend paid during the year was 800 million paid to Waterside PLC.
A subsidiary. So we paid, right? Included in dividends paid. Am I right?
Yes, sir.
So when we paid dividend, why do we pay dividend?
People invested.
They invested, right? So now, dividend paid, if I bring it in operating activities, because it's an investment, included in dividend paid of 800 million for the year, 800 million paid to Waterside. Should I take it to financing activity? Or I leave it in investing activity?
Should be in another investing now.
You should put it in investing
Investing.
activity, right? Okay, so let's do that.
Yes,
Since
sir.
that one was calculated, dividend paid on what side? Included in dividend paid, 800 million paid to what side? I want to look for the name. Okay, we can see a subsidiary company through which Breakthrough PLC conducts its investment activities, right? Are we there? So that is an investment in financial assets. In financial assets. How much? 800. Payments now, Abby? Any other thing?
Yes, sir.
So this is it. Let's open for financing activity. In case we see anything on investing activity, we'll bring it back as well. How many minutes more, please, to end this class? How many minutes more is it showing? How many minutes more? For those of you who are seeing it, it's not. It's just It's loaded. I don't know why it's taking. Okay, it's here now. Under a minute. Okay, let me set up another one now so that we can continue. Cash flow from financial activities. So in case there is anything that we are supposed to include, we'll get it. All right. So how do you know if you are right? You will see it. Financing activities. What are the financing activities you have? Financing in non-current assets. I mean non-current liabilities, Abi. Equity and non-current liabilities. Abi? Just that one. Okay. So in our non-current liabilities and equity, what do we have there, please? Yes. Is anyone there?
Yes, sir.
Yes, sir.
Okay. So in our non-current liability, we have equity, we have share capital, we have share premium. Abi?
Yes.
What do you say?
Oyemide.
Madam, please, you can mute yourself, please. Thank you. Yeah. So in our question, yeah, we have equity, right? We have share premium, we have revaluation surplus, we have retained earnings, right? Hello. Now there was
Yes,
a
sir. We can hear you,
place
sir.
I remember
Yes, sir.
that
Yes,
they
sir. I'm
bought
with you, sir.
new shares or something. Uh-huh.
Yes,
New
need.
share issued. They issued new share of 60,000. Abi? Hello?
Yes. Yes, sir.
Yes, sir.
They
60,000.
issued new share of 60,000. Right? Uh-huh. So let's do that. Proceed on new shares issue. 60,000, Abi? We received the money. It's an inflow. Abi? Am I right? It's an inflow. Right? So all these what's it called? Share capital, share premium, we assume that they would have gone with it. Revaluation surplus and retained earnings, all of them. Then anyone that is not there will also see it as well. But that alone is assumed to cover all of them. Now another thing is this: if you have enough time, please, it's a tax. Calculate your share capital, do the opening and closing balance, add every other information. You will arrive. It is possible. In fact, you should arrive at that 60,000 because that's the essence of the question giving it to you. We don't want you to calculate it again. Okay, so let's go ahead. Do we have any non-current liability? Yes, that reminds me, we have another non-current liability down there. So we have a non-current liability here, Abi, a non-current liability of 1.7 and 1.2. Abi, hello. 1.7 and 1.2.
You can
Am
see
I
it, sir.
right?
Yes, sir.
Hello? Is
We saw
anyone
it
there?
1.7 and 1.
Hello, sir.
We have that one, Abi. Yes, please. I can hear you. Go ahead if you have something. I can hear you, sir. Okay, we can proceed back.
Yes, sir.
Okay. Now, what do we have? Do we have additional information on our non-current liability? This one is already showing that we have additional loan. Right?
Yes, we have additional
1.2 and 1.
information.
But don't forget, from this 1.7, we removed non-current assets.
Yes.
Is that not so?
Yes, sir.
Abi,
That way,
the non-current asset that was purchased.
that way,
No, it's a
128.
liability now, Abi. So we have it there. No, we did not remove it. We have it as a liability. But we just know how much cash was paid. Right?
Okay, sir.
Hello? Are we together, please?
Yes, sir. Yes, sir.
Okay. So let's see what we have. This one, this is a share capital of 800,000, right? This one is for water side. No, it's not our own. It's for water side. Retrospective acquisition. What else do we have, please? What do we have? Don't forget, we have our interest paid that we have not done. Interest paid, and we've done dividend paid already. Abi, that dividend paid for our investment, which is our financial asset. So let's leave that one. Yes, what else do we have? I just don't want to forget them. Yes. I'm suffering it. As I'm suffering it, please, you two should be suffering it. Hello? Let's check. So now, this is, hello? Look at the breakout of our 1.2 million and 1.7 million. All right? Now, in our 1.2 million and 1.7 million, what are the information we've used here? We have deferred consideration, which is, of course, it's a liability.
We have used deferred tax, retirement
Sorry?
benefit liability.
We have used this deferred tax, provision of deferred tax, and retirement benefit. We've used the two of them.
Yes,
Right?
yes sir.
Have we used this
Yes.
58,000 deferred consideration?
No, but
we've
we've
not.
used the second one.
Yes, sir.
Sorry?
We've used the liability for the 288.
We've used the
We have
288.
used that one.
We have used
Yes.
288. But what about this
Yes, sir.
deferred liability of 58,000?
No, sir.
No,
Are
sir.
you sure?
Yes.
Okay, so we have a deferred liability of 58,000. Abi?
Yes,
I want to be
sir.
sure we have not used it. We have not used it, right? Now, okay, maybe we should take them one after the other instead of rushing them, right? So we have our loan repayment. Our loan payable is 11242. Abi?
Yes, sir.
Am I right, please?
Yes, sir.
Okay. So what's the difference between them? Do we have any loan repayment repayable during the year? No. I'm not sure. I'm not sure, right?
132,000.
Okay, so what do we have here?
Difference is
242
132,000.
130.
minus 240 minus 110 is what?
One
Loan
for
repayable.
132.
Loan repayable. 1210, Abi? 1242, sorry.
Okay.
Minus 1110. What will that give us, please?
0.
132.
132. 132, Abi?
Yes, sir.
Yes, sir.
Did we collect more loans or paid more loans? We collected more loans. Abi?
Let me-
Collected more loan.
So
Yes.
that's why.
Collected
So
more
that's
loan.
an inflow. Abi?
Yes, sir.
That's an. Let's do our interest paid first, please. Maybe in the computation of our interest paid, then we can see that. Now, interest paid. What's the information on interest paid? We have interest payable. We have interest expense. Abi?
Yes, sir.
Am I right? So interest at the beginning of the year,
Yes, sir.
interest payable, interest paid. Balance brought forward for our interest paid is what? Balance brought forward, interest payable. We have it here, 90,000. We've used trade payables. We've used taxation. Abi? Abi? Yes, we've used it. Interest payable. Balance brought forward is how much? What do I see there now? 90,000.
90,000.
90,000. Interest expense is how much? Interest expense that we added, 80,000.
80,000.
Abi? Am I right? Then balance carried down is how much? 100,000.
100.
So what's our interest paid now? Do we have any
80,000.
do we have any additional information on interest paid? Let's check
No.
before we conclude. Interest paid. Let's check. I remember one thing, that interest was included in the income statement. Who remembers that word? There is one
The
place.
amount payable, 58 million, is included in interest expenses.
What additional information is that, sir?
5.
I don't understand. Where is it? Amount payable of 58 million is included in interest expense, right? And that one has been included in the interest expense. 58 million. That one has been included in interest expense. If it was not included, then we can include it. What do you think? Is anyone there? Do you understand what I'm saying, please?
No, sir.
You don't understand?
Yes.
So the
At this
interest
point,
payable, this 58 million has been included already, right? Oh, the 8 million, not 58. 50 million is a non-current liability now. It's a deferred payment, I mean. But 8 million has been included. 8 million has been included in the interest paid, Abi. Hello? In the, wait, amount payable, 8 million naira has been included in interest expense. Hello?
right, sir. I hearing you, sir.
8 million naira has been included in the interest expense. But are we supposed to pay that 8 million naira now? Eh? I don't know if you understand me. Now, this 58 million, how did we get 58 million? 50 million. Ordinarily, we have 250 million as purchase consideration, right? 200 was paid in cash, 50 million in what? Deferred payment. We have not paid now. We will pay later. Abi? Now,
Yes.
but if you are looking at your liability, you will see 58 million naira there. They said that the difference between the discounted value of that deferred liability of 50 million and the amount payable of 58 million, in the liability we have it to be 58 million. Now the 8 million difference between the 50 million and 58 million has been included in interest expense. Now, is that 8 million supposed to be in our interest expense? No. Why? Because it is still a deferred payment. It does not relate to this period. Abi?
Yes.
That means the 8 million naira is not supposed to be in our income statement. So we need to remove that 8 million from this 80 million. Do you understand?
Yes.
Do we understand, please?
Yes.
Yes.
Yes, sir.
That will give us what? 72 million. Abi? Do you have any other
Yes, sir.
information? I
72
think
million.
that's any other information on interest. I doubt it. I think that was, I know I saw one information then on it. So what is our interest paid now? Interest paid is 62 million. So you can see interest expense is 80 million, but interest paid is 62 million. Do you understand that now?
Yes.
Eh?
Yes, sir.
Aha. Interest paid 62 million. What else do we have? Yes, what else do we have?
We have dividend paid. Now 892.
Dividend paid of 892. Thank you. Dividend paid
Yes, sir.
to subsidiary. Abi who? Where is that dividend paid? I'm coming. Please give us the figure. Give us the
You see up, sir, up.
892
Yes,
dividend paid.
yes.
Yeah, we mentioned this dividend paid earlier, right? Now, dividend paid of 892,000, right? Then also, out of the dividend paid, hello, included in dividend paid during the year was 800 million paid to Waterside. Abi? Now,
Yes, sir.
we've taken 800 million. From that dividend paid of 892, we've taken 800 million to financing activity. I mean, investing activity. Right?
Yes.
Am I right, please?
Yes, sir.
Please, do we understand what I'm saying?
Yes, sir.
So, this was paid to subsidiary, 800. But 892 is the total dividend paid. Right? So, the remaining dividend paid now, which is 92 million, was paid to whom? To the parents, Abi?
Yeah, yes, sir.
Yes.
Dividend paid to parents. 892 minus 800. That gives us 92,000. It's a payment now, Abi?
Yes,
Minus
it's payment.
92,000.
Outflow.
Interest paid is also
An
outflow,
outflow.
right?
Outflow.
Loan repayment is inflow. This one too, inflow. Abi? If we are paying a dividend to parents, what about to NCI? Hey, we've not calculated our NCI. So let's do our dividend paid to NCI. Dividend paid to NCI. Abi? Hello?
Yes, sir.
Yeah, well, with you, sir.
So let's get the value of our NCI first, right? And what will be the value of our NCI? What's our
Okay.
NCI? Yes?
Yes,
We have
yeah.
NCI in the question now.
Yes.
What's our NCI? Where is it?
96,000.
50
Can we see
non-controlling
it?
interest.
96,000.
Non
30% of the net asset.
90,000. Where do you see 96?
30% of the net asset acquired.
No, we are coming to that one. I'm talking of NCI at the beginning.
Okay.
90,000. Balance brought forward of NCI. 90,000. I mean,
90,000, yes,
then
sir.
Yes.
Yes.
share of NCI at acquisition. Share of net assets at acquisition. I mean, what's the net asset at acquisition given to us? The fair value is what? Where is the fair value now? This is our fair value, 320, Abi. Abi?
Yes.
30%
Yes,
of
sir.
320.
96.
30%
96. 96.
times
96.
320. 96,000, ba?
Yes, sir.
What else do we have? Post acquisition profit, Abi. Abi? Am I right? Post acquisition profit, which is our profit after tax. Hello?
Yes, sir.
Post acquisition profit now. This is it. NCI profit, 50,000. Abi?
50,000.
Yes.
Yes.
Share of P&L profit. Share of P&L profit. How much? 50,000. Abi? Right? Then we have balance carried down.
50,000.
What's the total?
120.
120 or 100? I think I saw 100.
It's 120.
Okay, 120.
20.
So balance carried down. Minus 120. And what would that give us?
116.
116,000. 116,000. We need to end this class. 116,000. Okay, so dividend paid to NCI is 116,000. Payment. Abi, let's net this one. We will see whether we are correct or wrong. If we are wrong, we'll correct it. What is the total here? 1,432,000 minus 1,432,000. What about the total here? What do we have? 78,000 minus. Abi? So what will these three give us? 180,000 minus AA. Okay, so this is our net cash and cash equivalent during the year. Cash and cash equivalent
During the year.
during the year. So let's check our cash and cash equivalent at the beginning of the year to arrive at cash and cash equivalent at the end. At the beginning
20,000 at the beginning of the year.
20,000 plus or minus.
20,000.
Eh? At the beginning of the year
280,000.
was our cash and cash
280,000.
plus or minus
280,000.
280,000.
Plus.
280 positive.
Plus.
Yes.
And what do we have at the end of the year? Whatever we get should give us what we have at the end of the
100
year.
is correct.
This one is what? 100.
100.
Abi?
100.
100.
Is it 100?
Yes, sir.
Yes, 100.
Oh, that means it's balanced.
Yes, sir.
Yes, balance.
All right. Thank God it's balanced. So if not, we go suffer. Yes, that's one thing about
Well
cash flow.
done.
But of course, one thing about cash flow again is that you don't need to stress yourself. Do you understand? Don't stress yourself too much on cash flow. Put the figures you can put. Anyone that is not jiving, anyone that is not jiving, just leave it. My question one in skills, I think, yeah, skills level was cash flow statement. Yeah, cash flow statement. It did not balance, right? In fact, I didn't even fill any paper in my skills level. So it did not balance, but I passed. So which means you don't need to make it balance. All right?
Yes, sir.
So we end our call here tonight. I'll see you all in the next class.